All right, well, welcome to this week's stock market review. My name is Bennett McDowell with TradersCoach.com, and today is March 13th, 2023. Hope everybody's doing well out there. All right, we're going to take a look at a bunch of charts to do with the markets today. I'm going to talk a little bit about the crypto market and the housing market as well. So I'm going to go through a few administrational items that we have to go through, and then we'll jump right in. All right, so first thing to talk about, of course, are the risks involved in trading. Like I always say, without those risks, there is no opportunity. So the two really go hand in hand. But you do need to be aware of the risks. They're out there. There's different types of risks in the market. You want to control your overall risks by always trading with risk capital. All right, that's money you can afford to basically risk in the markets. We deal in a realm of probabilities when we trade or even invest in the markets. So even though you may have a proven edge or system of trading stocks or investing in the market, doesn't mean you're going to win all the time. You'll have some losers in there. And so you have to protect yourself against the downside. I've written several books published by major publishers on this topic, and it's money management and risk control. I'll show you those in just a moment if you need help in that area. Also, too, check with your financial advisor or whoever manages your money to be sure what we talk about here is suitable for you. We're going to be talking about some stocks. We're going to be talking about some forecasts, and just run any of the ideas or suggestions that you want to take after listening to this past your financial advisor to be sure the actions you take are suitable for you. We don't know your personal situation, and of course they too. So very important to do that. All right, so I just want to highlight a couple books here. We got a Trader's Money Management System on the far left, and then Money Management for Traders on the second from the right there. Those are the books that deal specifically with risk control and money management in the markets. So you definitely want to check those out if you need help in that area. My new book, The Art of Trading, being published by Wiley Publishers in the Northeast there, is coming out probably within, I would say, the end of the year. I think we're wrapping it up by the end of May. So that's going to be out real soon. I think that's going to be one of the best books I've written, very comprehensive, dealing with today's market and the latest software tools out there. And then also, too, I've got the Elliott Wave Techniques, which is a book on a form of technical analysis called the Elliott Wave. As many of you know me personally, I'm a big believer in that. And so I've spent a great part of my career studying the Elliott Wave, and all the techniques I use are in that book. And then the Survival Guide for Traders is basically moving from an institution behind your computer at your home and trading just like a professional hedge fund. So that's in there as well, and it includes all the references. All right, so literally this week, there's no FOMC announcements, no worry about interest rates this week. We got crude oil inventories, some bond auctions coming out for today. Tomorrow, core retail sales, initial jobless claims, PPI, and retail sales. And then Friday's not much coming out on Friday. So in terms of interest rates, we're going to talk a little bit more about that. But specifically, my personal feeling on rate increases and interest rates, and feel free to comment in the comment area on what you may think about that or any thoughts that you have on that. I personally think we'll be lucky if we see two rate decreases. You may see one or two, one coming up maybe in the next few months. You know, it is a election year, and so the Fed is going to do everything they can do to keep the market happy and as stable as possible going into November. And so they may do just about anything to do that, including lowering rates, even if inflation comes back a little bit. They may do that anyway. So we'll keep an eye on that. Again, it's very possible also the case is building for no rate decrease at all. All right. So that is a possibility that I think you got to keep in mind. And I wouldn't be surprised if that occurred as well. So we'll keep an eye on the situation as it's unfolding, but I don't think you're going to get the euphoric rate decreases or rate cuts that the market and most people anticipated going into 2024. Real estate market, we'll talk about that and see how that could be affected as well. All right, when we look at charts, I've developed quite a bit of software over my 30 years of doing this. And I've got charting software, I've got scanners, and I've got risk control software that we actually load onto charts of markets we look at. And it tells us when to buy, when to sell, where to put our stop exits. Basically the risk control software is telling us how many shares or contracts, depending on the market we trade, to buy or sell. And so that is how we manage the market, so to speak. It's a form, it's technical analysis. You can combine it with fundamentals if you want. When we, for example, day trade, it's just purely technicals. So you can check this software out if you're interested in learning more about it on our website, and we'll put some links, of course, in the recording below, which leads us to now our first chart. Okay, so I'm going to isolate this and bring this up full screen so you can see it here. And this is the daily chart of the Dow Jones Industrial Average. And for those of you that, of course, are our Yummy subscribers, you get this chart, of course, and a write-up on it delivered to you every Sunday in the written report. So I'm going to go over this now and just go over a little bit about what it means. All right, so we've got some numbers here. For those of you that are not familiar with the Elliott Wave, these are Elliott Wave numbers where you assign numbers to certain movements in the market. And so when you have a movement in the direction of a big trend, that's called an impulsive wave. And the biggest movement of all is wave 3. And so we had that. Then we had a correction, which results in a wave 4. Wave 4s mean that the market is profit taking or pulling back. And then we have another wave up, which we're in now, called wave 5. And here's the target for wave 5. So with the Elliott Wave, there are 5 waves in a trend, and the trend ends on wave 5. And so that target currently for wave 5, where we think this market will eventually end and then, of course, turn bearish, is around 40,281 up to 47,426. So we're getting close. We're not quite there yet. We're probably going to have some type of pullback or profit taking come in before we obviously get to that wave 5 target. And that certainly could happen at any time, and maybe pulling back a little bit now. We'll take a look at the live charts in just a moment. But the idea is that once we get into that wave 5 target zone, then we can expect a nasty reversal. And I mean a big trend down. And so you kind of want to be on guard with that. I would talk to your financial advisor about what to do if the market sells off when we get to that particular price levels that we indicated before. But keep an eye on that. And, I do think we're probably going to have a pretty good few months left in the market, maybe 6. We may not reach that target. And when we reach the target, then we'll have to see how high up and into the target it goes. So again, the range is around 40,280 up to around 47,420. So pretty big range. So we could get up quite a bit higher before we have to worry about a sell-off. So you're going to want to come here every week because I'll keep an eye on the technicals that indicate when I think we're in that big sell-off. Now, there is a small probability, like a 15% probability, that the market could reverse before it gets to the target and sell off. That's possible. All right. There's a 70% probability we'll get to the target and a 15% additional probability that we get even above the target. So the chances of getting into the target are pretty high. Now, when are we going to know that that 15% is happening? Well, we're probably not going to know until we take out this bottom here. So the market would have to come all the way down here for us to realize that, you know what, we may not hit that target. So it's got to come down around the 32,000 range and then go below it for us to kind of feel that, maybe wave 5 is in and we're not going to hit the target. Is it possible? Anything is possible in the markets. So we got to watch that. But we're not going to know that until it gets down into that range. Anything in here is profit taking, and we could see a move back up. So we're going to stay with that target zone unless we breach below that. And if you guys have any questions on that, feel free to ask. All right, on the Dow Jones Industrial Average 60-minute chart, what I did is I took this shorter term chart where every price bar here represents an hour of activity. So in a trading day, you're going to have multiple price bars here, right? Like 6 price bars. But in a daily chart, like the one I just showed you, you're going to only have 1 price bar representing a full day. So this allows us to kind of like put the day under a microscope, so to speak. And when we do this, we can actually see the different intraday wave movements. And if we attach an Elliott wave to this, what we're looking at is something like this. And as long as we don't breach this high here, then chances are we're going into a wave 4 profit taking area at this time. And then once that's over, we should surge back up. So I think we may be possibly in a profit taking situation in the market, which could last a little while until we get down to that profit taking pullback zone, which is around 37,200 to 35,928. So that's the target of where I think prices are pulling back now. And we have a red PTF, which is an indicator I designed to basically indicate a probability of what the market is doing, and it's indicating it's bearish now. And it has a 75% probability that will take out this low, which will start to put it into the profit-taking area. And again, 70% of the time, based on this fib retracement, the market will reach that target. 15% of the time, it'll be shallow. And then another 15% of the time, it could exceed it a little bit. So that's kind of what I think is happening. It looks like this top back here has held for a little bit here. And so if we continue to move on down and take out this bottom, I think we're on our way down to the profit-taking zone. So this is what I think is going to happen. I think we're going to come down here, and I think it's going to reverse at some point and head back up, take out the high, and go into that wave 5 target zone that I showed you on the previous chart. So if we go back to that, based on that, I think basically we're going to pull down into this area here, turn around, and then head back up. So that's kind of what I'm thinking is happening at this particular point in the markets. All right, now it's possible it could make another high before the profit taking comes in. And if that's the case, then this profit taking larger zone will move up because we'll have to redraw those fib retracements. So this is, maybe kind of technical for some people, but this is the way we analyze the market using technical analysis. All right, on the S&P 500, we have breached its all-time high fairly recently. It was a little bit lagging compared to the Dow. It's on its way up. Its profit-taking zone is between 48,665 to 466. So this is that 60-minute chart. When I show 3 screens like that, this is the daily, and then this is the weekly, which is a long-term chart. So basically, if the Dow goes into a profit taking, I wouldn't be surprised if the S&P, of course, follows and then goes down into this pullback zone here and then goes up, of course, to take out its wave 5 target zone here. So it's kind of the same similar configuration. And then if we look at the NASDAQ on the weekly chart, we've got the target for that one at 19,310 up to 24,983. And a pullback area for that would be 14,961 down to 14,038. So chances are it's a little too early to say for sure, but if we're in that profit-taking pullback now, which I think we could be entering, then that's probably where we're going to come down maybe over the next month or so, and then see some more resilience back up to the upside. All right, I want to talk a little bit about real estate. Real estate's kind of an interesting topic these days. Everybody's kind of keying on it, so I added it to our overall review here. And real estate's very local, so it depends on where you're living. What you're seeing in your local market may be different than what other people are seeing in their market, so keep that in mind. Now, this is the Case-Shiller Index. Hopefully you can see this pretty well. Let me just see if I can even boost this up so it's bigger for you. How's that? All right, so the Case-Shiller Index versus the CPI measures the average prices of homes across the United States versus the Consumer Price Index, known as the CPI, which measures inflation. Now, there's many different types of Case-Shiller indexes. There's one for the UK, There's one for commercial property and so forth. But this is residential in the United States and is represented by the red line. Okay, so I'll just put CS for Case-Shiller. Under that, we have the CPI, which is measuring inflation. Now, for as long, I think, as probably everybody's been living here in this room, right? The real estate's been known to be a good investment because it stays above inflation, right? And you can certainly see that that's pretty much the case with the Case-Shiller index being pretty much always above the CPI. And that's why, you know, a house is a good investment, but also a nice place to live. So it kills two birds with one stone. So it's been a very popular investment vehicle, and you have to live someplace, right? So if we go back to the 1980s, back in here, this was kind of a standard and normal way in which housing kept up with inflation in an orderly fashion. We got into the late 1990s, and we had the tech bubble and all that kind of stuff. And also, too, interest rates started to go down. And therefore, the interest rates went down. More people could afford homes. The demographics were changing as well. And so we started moving up dramatically away from the CPI. And housing prices continued on up until we got to the famous era of 2008 period. And this actually was over a couple years. Okay, you can certainly see it started really before 2008 and, you know, went on into almost 2010, 2009. So what happened is basically the CPI got very far away, or the Case-Shiller index got very far away from the CPI, which was kind of still orderly. The inflation rate was moving up, but no much difference than it had been in the 90s. So it was pretty orderly on the CPI. But then all of a sudden, real estate just simply took off. And whenever you get this far a distance from the CPI, it's kind of like when you look at the stock market and you see stocks getting very far away from an orderly trend line. What happens? Eventually, they pull back, right? And so that's what happens at a bubble. So when these distances get far apart, we call these a bubble. So this was the 2008 housing bubble. And then, of course, like a rubber band, it pulls back, okay, when you release it, and gets closer to where it should be to the CPI. And so that happened. So then once it did that, the market recovered because it was more orderly and the values came down in housing. People could afford it. And so when that happens, what happens? The pullback ends and the market starts to increase again, just like it would in the stock market. All right, so then that happened. And then what we had is very low interest rates, okay? And then we had, of course, COVID, which created almost zero interest rates and also increased the demand for people to move into the suburbs from some of the cities to get out of the pandemic areas. And then also, too, people that were kind of hunkering down, so they weren't really selling during that period. And then the government had a lot of stimulus and stimulus money they pumped into the economy, and the housing prices just took off. All right, don't forget, interest rates were practically zero. So it was probably the best investment in town at that particular point. But now look where we are. All right, we are extremely far away from the CPI, even more so than in 2008. And if you remember, 2008, that was a nasty correction we had after that. Remember all the people selling homes were taking losses on their homes. The economy kind of turned sour. So it was a tough time, but not as bad as what potentially could be happening or setting up to happen if the market corrects. So I'm a little concerned, and say the least, about the real estate market. If history is any forecasting method of the future, then we're due for this Case-Shiller to come back closer to the CPI. And in order to do that, I think it's got to come down about 40%, maybe even a little more. And so think about where housing prices are now. And once this bubble ends, if it comes down closer to the CPI, you're looking at probably a 40% decrease. The other thing too that's interesting about bubbles is they can last a lot longer than you think. I mean, this one lasted several years before it finally cracked. And we've been in this one for, several years at this point. And so that's not unusual. People saying, well, it hasn't broken yet, it's not going to. Well, that's not really true, okay? Bubbles can last a little while before they actually burst, so to speak. And so you got to be careful about that. Another sign of the top is when you start people, seeing people ignore the evidence, and the evidence is right in front of you that we're due for a pullback. And they'll say things like times are different now. And, really times are not different. They really, every time you look at history in the markets, you see the same repetitive patterns over and over again because of the psychology of people in the economy. Okay, so keep that in mind. It's just a heads up, all right? So I think you need to be prepared for the day that could happen. I don't think it's a matter of if, I just think it's a matter of when. And so you kind of want to have your ducks in a row. And if you're thinking about selling or need to sell, it may not be a bad time to think about it now before the bubble bursts. All right, I want to show this other chart. This is from a company called RE Venture Consulting. And I've shown this before, but I like to show it because it also looks at real estate from a different aspect. Here we're looking at home prices versus incomes across the United States. And basically, when prices of homes get so high compared to people's incomes, then something's got to break, okay? And in this case here, if we go back to 2008, all right, we had this bubble here. And basically what they did at RE Venture is whenever they spotted a bubble, they turned it red, okay? And so that's indicating that compared to average incomes, housing got unaffordable and unsustainable. And again, you saw the pullback that happened with that. And notice that when they became affordable, the market turned around. All right. Now look where we are here, current day. Now this was back in 2023. It's even worse now because we had another uptick here like this. So this was done in the summer of 2023. I certainly hope they update this this year. I think it's a fabulous chart they put together here. And in 2023, they said home prices are 31% overvalued compared to income levels in America. I'm thinking it's more like 40 now because we perked back up even higher in some areas. Now, in some areas, you're seeing markets come down. All right. So again, it's very local business, but these are averages. So here's another indication to back up what we're seeing on the Case-Shiller and the CPI chart. Okay. So again, it's hard to ignore this when you start seeing these charts so prominent here. And here's another one called debt to income ratio, again, done by RE Venture Capital, which I think is another fabulous chart. And basically what they did is take the home buyer debt to income and determined basically compared to the housing prices now, we're about 40% in 2023, which takes into account that, everybody's debt levels. All right, which really means that this is the worst affordability level on record in 2023 when they did this chart. Okay, and it was even worse than back in 2008. Okay, when it cracked. So again, another chart indicating a bubble. So when you start adding all these things up, you got to take a step back and say, okay, things are nice now, but these charts are indicating a possible pullback imminent in the real estate market. Now, when will it come? Well, if we had that kind of crystal ball, we'd be in pretty good shape, right? We don't, okay? We can be ready for when the storm comes by getting ready today. That's the point. It's kind of like a great analogy to all this is, again, I'm a sailor, so I've done a lot of sailing in my lifetime. And we would always set the sails on a boat, right, to the current weather conditions, even though a storm may be forecasted. All right, so you bring the storm sails, you keep them in the locker, and when the weather changes, you change the sails appropriately. Same type of thing here. All right, enjoy the ride, be prepared, and when the weather changes, change with it. Okay, So keep that in mind. All right, so let me go now out of here. That's all I wanted to say about the real estate market. Again, if anybody has any comments they want to add, feel free to do that. Here's the latest chart on the Dow Jones Industrial Average. These are our scanners running up here. We're not going to be looking at those. I just want you to focus on these three charts. And again, this is the 60-minute chart, and this is the daily, and this is the weekly. So it's basically a short-term look, an intermediate, and a long-term look. So we're still kind of moving on up. We have not taken out the high that occurred back earlier in February. So I'm kind of thinking it could go up one more time. And if we do, we're going to have to redraw the retracements. But we have to see if we start working itself down into that profit-taking area. So my feeling is right now, if you're long the markets on just about any stock you look at there, you've got to decide that if you want to take profits on this big move up that we've seen since October, or if you want to try to stay in or even get out and then get back in once the profit taking is eventually over and try to make it back again into the target zone. So you're going to have to talk to your financial advisor and make that a game plan in your determination. Okay. All right. So, that's kind of thing. Now, Frank's saying credit card debt would be another nice one to look at. It's at an all-time high. They include that in that one, RE Venture includes that in the overall debt. Remember that one little table I showed you of the overall debt, the last one I showed you? They take into account credit cards in that, I do believe. Okay, so that's kind of why I show that chart. But it's even worse now, so you're right about that. All right, now, the other thing I want to take a look at before I leave you today is just a couple quick markets. I want to take a look at Bitcoin, which, and I'll do that using the GBTC. There's many different ways you can play the Bitcoin market. You can open up a Coinbase account and buy the BTC through that. You can even get maybe a cold wallet and hold it in there if it's a lot of money and you want to bother doing that. But here's GBTC, and basically this is a way, if you're only trading stocks, that you can actually participate in the Bitcoin market. Of course, there are some fees associated with this ETF, but the fees wouldn't have mattered if you got in when we recommended to get in right around the $10 level. And, it's done really well. Now, where is it going? What's it doing? All right, is it going to go up to 100,000? Is it going to go to 120 or $100 on the CBT up to $120? Some people certainly think so. Let's look at the technicals. All right, a couple things. This is no question a wave 3. All right, our indicators are indicating that as well. All right, it's a classic wave 3. You can look at any stocks that are moving greatly, NVIDIA, any of the big boys, you can see the wave 3s. I mean, you just can't miss them. That's a wave 3. But guess what? After a wave 3, we have a profit-taking wave 4. And the question is, when is wave 3 going to end to go into that wave 4? Well, this is indicating right now, we're seeing a lot of strength in this market. I mean, look at the momentum indicator. Let me just pop that up so you can see that better. All right. That is huge. So any pullback from here is going to be minor. All right. We don't worry about a major turnaround until this owl gets way down in this area. Okay. And this is owl. We call this the owl. This is measuring momentum. All right. So more highs coming. I would say you got a good chance of that for sure. All right. Now we do have a yellow PTF here. So things are starting to slow down a little bit. All right. There's not as much buying now as there was earlier. All right. Also now on the 60-minute chart, we have bearish divergence building. Okay. But not enough yet to be worried. Okay. So could we go into a correction tomorrow? It's possible. All right. Could we make more highs? Likely. All right. But kind of like the housing market, the correction's on its way. It's not a matter of if it's a matter of when. All right. So, if you want to buy here and you don't mind holding it long term for the correction and then seeing more highs, which I think will happen, then you can hold it. If you want to take some profits and you got in really early and you're in good shape, you might want to do that. You're going to have to decide and make that decision along with your financial advisor. Okay. So, long term, any pullback we get here, folks, should be followed by more highs. So if you're a long-term holder, I think you can, with a probability, rest that will happen, okay? And be pretty confident. Short term, you might see a pullback. So you gotta, that's Bitcoin. Now, there's something called a halving coming up on April 1st. And a lot of people think that will maybe blow the market off and maybe complete the wave 3 top. We'll see, okay? So let's see what happens with that market. And, the other side of the coin that some people feel is, what's the real value of Bitcoin? All right. It's not like buying a stock of a company where you have the company as the value. Here, you're having as the value. The reason why you buy this is either it's a momentum trade, or B, you feel the value will be in that it will be a major currency in the future, even though it's not now. Okay, so you're betting on that, so to speak. So a lot of things to take into account here. All right, I want to take a look at bonds real quick, and then I want to take a look at, of course, gold, okay, and silver, and then we're going to wrap it up, and oil. All right, so TLT, I'm not convinced it's a buy yet. I know you could have made some money up here, but my indicators are saying the bottom's not in on this. So that's, until that changes, I'm not going to be recommending TLT at this time. All right, just so you know. All right, let's take a look at gold, which has done real well. All right, it's already popped up. So now, one of my indicators just turned yellow that was bullish on this. So now it's gone to neutral. So the new highs that we have kind of expected, my target was about 220 on this. All right, short-term target for a pullback was here. Okay, but it went right through that. So I would say probably gold is going to make more highs. We've got a green PTF here. So I think you could stay with it. Again, my target's around 220, and I'll have to reassess it when we get to that level. On silver, all right, we had a triangular pennant here on the daily chart. We broke out of that. We also had one of my trend trading pyramids show up. We have green here, and my forecast, of course, for silver now is bullish, okay, since we broke out of those patterns. So I think silver's looking pretty good. I'm going to be a little bit more conclusive about that when it starts taking out these tops, because this is kind of like a channel box that it's been in. So it really hasn't broken out of the channel box yet on the longer term charts, but it looks like it's going to. So, all right, so if you want to take an early entry, I think that's okay. Just check with your financial advisor once again. All right, then finally, I'm going to wrap it up with USO. I went a little over today, but USO, of course, is the ETF for oil. My target on this is 99, roughly to 125. So I think we're in an Elliott Wave 5 on the chart on the far right. So if I number that, it would be something like, this would be a 3, this would be a 4, target 5, okay? So that's kind of the way I'm looking at that. All right. Any questions on anything? I think that pretty much is it. I like to keep these to about a half an hour. All right. So I appreciate you guys coming, of course. And let me just see if there's any last minute questions. All right. So market's probably due for some type of pullback. It's kind of a little early to see if it's doing that now. It could be. But I think if it does, I wouldn't sweat it, because I think if it comes down to that target zone I showed you for some profit taking, we should see another move up. Now, if the market does not do profit taking, but instead continues to rise and hit that target zone, then that will be another discussion. All right, so listen, we'll be back next week. Thanks for being here. For those of you that are clients, don't forget, we have the client support in just about a half an hour. All right, have a great week, everybody, and we'll see you next week. I'll put a little music on. I'll put the charts back up to full size, and we'll see you next week. Thanks so much.